In this video, guys, we're going to look at how to combat undertrading. Yeah, you heard me, undertrading. Stick around. Hey guys, warm welcome to you. All right, so undertrading is generally unusual. I'm not sure how many people suffer with undertrading, but I come across it from time to time. We talk all sorts of challenges, and most people have the overtrading. I think that's something I definitely had to deal with. Struggled immensely with overtrading. Taking far too many trades with far too much size and paying the price for it for a long period of time until I grabbed hold of myself and went, you know what? It doesn't make any sense. Why are you risking your hard-earned capital on these substandard trades? Get a grip, source it out, do what you need to do. And I've talked about some kind of funny way I did that with banknotes, but undertrading is a different thing. You might have a situation, and let's say you're kind of watching this cable trade, for example. You're watching cable. You say, you know what, I'm gonna buy a breakout. I've been waiting for it to recover after the coronavirus dip. I'm gonna buy a breakout. I'm just picking this, guys, because I happen to have cable up. Could be anything. Could be gold. Could be Bitcoin. Could be Netflix. Whatever strategy it is either. And I'm gonna buy a breakout. I'm gonna get involved, and that's a logical thesis. Your target might be back to the pre-coronavirus highs. You think there's a good risk-reward ratio in it. You might say, I'm going to have a little stop under the, whatever you frame the trade. We're not going to go into framing the trades in this video, guys. You get the concept of framing the trade. But the undertrading would be for someone who kind of sees that trade and then just, I'll look for the next one, and then kind of looks on to another trade. I'll look for the next one. Looks for another trade. I look for the next one and just doesn't pull the trigger. And I appreciate this is on a higher time frame. And undertrading generally happens on a lower time frame. For day traders, they see the opportunity. We can use exactly the same example here. See the opportunity, don't pull the trigger. Then see another opportunity. Don't pull the trigger, and then see another opportunity, and don't pull the trigger, and then finally pull the trigger. Maybe it's not even that good. So how do we combat this? Well, let's kind of reverse back. And the undertrading comes really, I believe, from having a lack of confidence in your system. And so you're trying to get so many things lined up in a row for you to pull that trigger, which never happen. Or if they do, by the time they do, the trade's long gone. You're like, I've got to see volume. I've got to see where we are in relation to the prior high, where we are in relation to the stochastic. The MACD's got to be this. It's got to be above that. It's got to be this. And you've got all these well-meaning tools that help guide the trade, but you never pull the trigger because there's so many that they come in line, or if they come in line, you still don't even believe that it's the right thing. At the end of the day, guys, one practical way of looking at the market is this, and hopefully this helps, is it doesn't matter what strategy you use. It doesn't matter what trade you take. What matters is your risk-reward ratio on the trade and the probability of success. And I talk about this in detail. I've done it, commented on it, enjoy looking at the markets in that way. But for you guys on the channel here, it's just considering all I'm doing is, as long as I have my risk capped, as long as I have a stop loss in place, or however else you manage risk, is not an argument for or against stop loss, some form of risk management in place, the market can't hurt me. The market will do what it's going to do anyway, regardless of what I think of a trade. And all you're trying to do is express an opinion with the least amount of the least amount of risk possible. That's it. And when you come to terms with the fact that it doesn't matter if you have everything in a row, it doesn't matter what this looks like, it doesn't matter what pattern it is, you're ultimately still just taking a bet on the future direction of an asset. And whether that is over the next 15 minutes or whether that is over the next 15 days, that's all you're doing. And all you're controlling is where you're going to come out of it. Now, of course, when we go into the intricacies and we start to add to edge and we start to become profitable and have more consistency, we're looking for strategies, we're looking for methods, we're looking for ways of bringing the trades to our attention, of executing in the best possible entry we can, managing the risk in the best we can. We're looking to fine tune all these buttons to get and increase that P&L, increase that equity curve. But when you're kind of stuck and you're not knowing what to do, not knowing what to pull the trigger, you're not knowing when to take a trade, you end up just kind of sometimes taking a step back and understanding what we're really doing in this game. We're really just expressing an idea with an amount of money, which is our risk. Like, I'm going to risk X amount on this. That's my distance from the entry to the stop. Let's use Netflix as an example today. I'm going to buy this drive here. I'm going to have a stop under there. That is the trade. Now, you don't know if it's going to work or not, but all you're doing is literally saying, I'm going to risk this much money on this idea. And I think that it's going at 505, my 502, $3 risk, but I think it's going to go up by $10. That's all you're doing, and I think there's a high probability of doing that. Even better, if you can get those two up, great. So not fearing what the market can do, understanding, yes, it can stop you out, but undertrading tends to come from a fear of not really knowing what the market's going to do, worrying what the market's going to do, and being fearful of the market. Guys, there's nothing to fear. Dial down your size a bit if you're fearing it. Get a bit more comfortable with risk. Get a bit more comfortable with getting stopped out. Get a bit more comfortable with losing trades. Have some comfort in things, and then start to kind of place the trades. Force yourself to take some trades and realize there's nothing scary about it. It can't harm you if you're managing the risk and you're keeping your position size low. And guys, hope that's helped, should I say. Whatever you're trading, take care, keep the risk managed, and just look for those setups and just trade them and not be so concerned with the outcome. Take care. Bye-bye.